What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benesocky and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, welcome back to Real Estate Investing Demystified.
Absolutely. Demystified. We're going to be demystifying capital raising, money raising, equity raising, all these different great topics, because no venture is possible without funding.
That's right.
You know, like thousands of years ago, maybe I'm not sure, hundreds of years ago, when the new world was found, and people in the modern world at that time, Europe, were trying to get these ships together to go to the new world and bring back all these riches, gold, smoked fish, all these great things, jewels. They needed some funding.
Yeah.
So people want to put a ship together. They want to, put the troops together to go to this new world. They would go to royalty, the wealthy people, and they would get money from them and say, hey, listen, you put up the money. We'll put up the sweat equity. I guess they didn't call it sweat equity back then, but hey, you put up the money, we'll put up our lives.
Yeah.
We'll go to the new world, we'll bring back riches, and we'll divide it up. Today, modern day, the way business works is the same thing. You go to investors, you say, hey, investors, put up the money. We'll handle everything. If it's a real estate deal, if it's a new company, if it's a startup, whatever the venture is, capital is always needed. And today we're going to be talking about, raising money, but not only about raising money, but also about the regulatory framework to be able to raise money, in Canada and the US a bit as well, and talking about the platform that we have connected with, and the platform that we're on. The CPI's deals are on this platform.
Yeah,
FrontFundr.
Absolutely. And I'm really passionate about, capital raising and what we've been through in the last 5 years. I mean, we've really learned a lot about compliance in the Canada, regulatory compliance in the US, and myself connecting with investors and relationship building, and telling a compelling story, which a lot of issuers on FrontFundr's platform have to do in order to raise the capital. And relationship building. I mean, there's so many exciting things when it comes to capital raising. It's like an art. And so I'm really exciid to dive into this show
Absolutely.
today.
Yeah. Why don't you tell our audience about our guests, and let's get this show started.
All right. Today we are joined by Peter-Paul Van Hoeken. Now, Peter-Paul has over 15 years of experience in banking in Europe. After moving to Canada in 2010, he worked with several young companies and realized that there are no efficient channels for attracting capital, and that most investors are locked out from investing in private companies. Peter-Paul is the founder and CEO of Silver Maple Ventures, Inc., a company that built and operates Canada's leading investment crowdfunding platform, FrontFundr and DealSquare, Canada's first centralized dealer platform for private placements. Now, he's a member of the Ontario Securities Commission, FinTech Advisory Committee, and also serves on the advisory committee of the Private Capital Markets Association in Canada and National Crowdfunding Association Canada. Peter-Paul holds a Master of Science and Business Economics and Finance from Erasmus University, Rotterdam in the Netherlands. So welcome to the show, Peter-Paul. We're very excited to have you here today.
Welcome.
Thank you. Thanks for having me.
Yeah, let's dive into things. Peter-Paul, before any of our US based viewers and listeners log off thinking that this is going to be only for only a Canadian show, I want to just let everyone know that FrontFundr does help issuers from both Canada and the US raise funds on their platform.
And internationally. So if you're in Europe and you hear about this, you know that there's a platform that allows you to reach Canadian investors to invest into your, and I know Boxable is a company that I've been looking at for a while. It has a connection to Elon Musk, and Elon Musk lived in one of these homes that are they're basically a home that you can build in a matter of seconds, because you pull a string with a crane and it builds a home in a matter of minutes. So that company is, as soon as I knew that company was on FrontFundr, I knew that they help international and U.S. investors.
And that's amazing. And Canadians love to invest elsewhere as well. So Peter-Paul, let's get into things. How did the idea of FrontFundr come about? And what efficiencies or missing links did you see in this space?
Efficiencies you probably saw. Yes.
Did you see or missing links did you see in this space to start such a platform?
Yeah, so it's actually interesting what you mentioned in your intro about shipbuilding, and the transport via ships and the actual funding for ships. And as you said in your intro, and originally as I'm from the Netherlands, and as you may know, there's been a period where the Netherlands was sort of the main maritime transporters across the world for spices and all sorts of goods. And obviously there was a very vibrant shipbuilding in the Netherlands, and actually to fund those ships, they actually used the sort of, I would say, the early concepts of investment crowdfunding, because they actually indeed enabled the public to invest in these companies to build the ships and obviously spread the risk, because of course the ships in the storm and weather, ships would also go under. And so it was sort of, I guess, full circle on what investment crowdfunding is today. The only difference is we perhaps use a bit more, technology, right? Digital technology. But, to answer your question, I indeed, upon moving to Canada, I started working with early stage companies, and helping them to get ready to raise capital. And I experienced how challenging it is for those companies to raise capital, and also how they're going to the usual suspects, a small group of angel investors, perhaps family members, perhaps if they're a bit later stage, you could also tap venture capital funding, but it's a small group. And secondly, I was intrigued by what I saw happening in the UK, where actually the first investment crowdfunding platforms launched in 2010. And so that made total sense to me. The fact to use technology and connect companies, early stage companies that are obviously in need of funding to grow their business, and connect them basically with the wider investor community through online platforms, and thereby enable them to reach out to a much wider audience, beyond these usual suspects, and actually also tap into the real retail investor space. And so I was intrigued by that. I thought this makes a lot of sense. Got excited about the fact that you can open up, you can democratize basically investing in private companies, and you enable these private companies to tap an entirely new pool of capital from the public. So that's how it started. And of course, we might get into that a bit later, but to pull this off, if you deal with investments and that's a regulated space. And so this was really in the early days. There was no such online platform in Canada at all. And in Canada, we also have a pretty tight regulatory landscape. We actually have, we don't have an SEC like in the US. We have, provincial regulators. Sometimes say, hey, we're blessed with 13 of them, but it actually imposes quite some challenges because we don't really have harmonized, rules. So I embarked on that journey and started to pull the pieces of the puzzle together. Technology, get the regulators on site, got registered, and to essentially build this curated marketplace of early stage companies and connecting them with the wider investor audience.
Amazing.
Yeah, Peter, let's distinguish between, startup funding and then real estate deal funding.
Yeah.
They're vastly different, and the types of investors who invest in these investments are different. I mean, give us a crash course on startup funding, which encompasses VC funding, seed funding, angel investors, pre-seed funding, and then a real estate investor who just needs some money, some capital to buy a multifamily deal.
Yeah, absolutely. And so the typical startup is obviously, entrepreneurs with new ideas, typically, innovating a market, resolving a problem with an entirely new solution. And so obviously those are typically high risk ventures. And that is why typically these companies are looking for capital in the form of equity that carries a high risk, but also potentially a high reward. Mm-hmm. If you're able to get into a startup from the very beginning, and a startup does well and goes global and perhaps is acquired in multiple years or perhaps goes public. Yeah, if you were able to invest in the early days, you obviously you have the potential to realize an enormous return on that investment. But
like a Peter Thiel investing in $1 million into Facebook, and that $1 million being worth billions of dollars. So
totally. Yeah. What if at the time of Facebook, everybody who's sort of the first adapters using it say, hey, that's cool, I can really see this succeed. Oh, maybe I can invest for $100 or $500. They would have had a huge return on that. So that's exactly the idea. So the typical startups are, those companies that are looking for that risk capital to build their companies. And of course, that's different to other asset classes like real estate, which typically has an underlying asset. And of course, investors want to participate because they also expect that, the value of the property will appreciate and all of that, which also is, by the way, an asset class that's also being, let's say, democratized and opened up for the wider investor community. I mean, how many people perhaps don't necessarily have the means yet to purchase a house, which would also, let's say, concentrate all their assets in one property? What if they can basically tap into fractional ownership, in real estate? So the whole investment crowdfunding space is covering multiple classes, but the typically the companies we see on FrontFundr are indeed private companies, startups, scale-ups, and later stage companies that are either in tech space or CPG or impact investing, those kind of categories.
Got it. Great. Yeah. You've mentioned this concept of you said you said this term, the democratization of investing, a few times. I wanted to kind of bring the attention to this topic because we hear that as well. We want to be able to allow everybody to invest with us, but the regulatory framework does not allow that. And some of it makes sense, but there's two main schools of thoughts when it comes to this idea of everybody having the opportunity to invest into any deal they wish. You have the school of thought that, private investments should be reserved for the financial savvy. It should be reserved for high net worth investors, high income earners, people who are, very financially literate, and the common man, the blue collar, shouldn't come over play over here. They should stay in their own sandbox. And I would say 95% of people, both in Canada and the US, are non-accredited, so they don't have an option to get access to these investments. You also have this school of thought that everybody should be able to invest into anything they want. And the argument they use is that, hey, if today a blue collar guy, a mechanic or a teacher wants to go and empty out their bank account and go and buy any type of stock they want online, they can do that by a click of a button. Why can't they invest in an exempt market or private placement type of product that is known in the US? In Canada, it's known as exempt market. In the US, private placement. We'll go over that in a moment to distinguish between the two. But yeah, these private companies, why can't everybody, as they can invest in Wall Street, why can't they invest in this in a private company? What is, you've been in this space for a while now. You've talked about democratization. What is Peter-Paul's view on this topic? How do you see it?
So the whole idea, if you look at the public markets, where we actually have seen retail investors, enter the public market. So really, stocks, bonds, everything that's publicly trading, that used to be dominated by institutional players as well, and that has dramatically changed across the globe. Where you have online investing platforms where anybody can basically, to your point, invest in public stocks as they like, and so they already have access to investing in these in public securities. So it raises the question as well, in private markets, which is a different asset class, which depends on what you invest in, but it's typically has a higher risk, but also, as discussed, potentially higher returns. Why would the same public not have access to those investment opportunities? And in fact, if you sort of look at it from a portfolio perspective, roughly having about 10% in private market securities in the total portfolio is recommendable. So how is it that retail investors are locked out from investing in private markets, where it makes sense to perhaps allocate a proportion to that? And the other perspective I would bring in here, which I think is really important, is that, as we mentioned, newly found companies that resolve a problem that has a potential to really go global and become really successful, there is obviously upside for investors. And so why would, again, retail investors not be able to invest in those kind of opportunities? Why are they traditionally only able to invest in, we talked about Facebook early on, when it goes public, when we all know that the massive returns were created, in the earlier days, or at least by the investors that were able to participate earlier? So not fair, is it? Really? So why wouldn't retail investors have access to that? So that is what I strongly believe, and this is also why it excited me to start FrontFundr, is the fact that, that you basically give the wider audience, give retail investors the opportunity to invest in companies that they're excited about, that they believe in, and that they like to see succeed. Now, to your point, does it mean that they go in FrontFundr, watch your video and say, oh, cool, this can only go well. And I'm indeed going to take my whole bank account and put all my money in this company because surely it's going to go through the roof. Probably not very wise. And that's also why FrontFundr we're registered. You mentioned exempt market dealer. We're a registered dealer. We're actually the first registered EMD in Canada to transact fully online. And so we've been doing quite a bit of pioneering in early days, working with the regulators and getting the approval to transact from start to finish online. And at the same time, make sure we comply with all the, securities rules and all of that. Part of those rules is that we also have an obligation to determine based on investors' profile whether it's a wise idea to make a certain investment and a certain amount in one company. So for each investment of FrontFundr, we perform a so-called suitability. So that's why we need to know a bit more about the investor, about their risk tolerance, about their assets, their investment experience. And so if we see an investor that invested $50,000 of a total investable asset of $100,000, we will deem that unsuitable and will notify the investor, say, hey, you might want to diversify and perhaps invest less and, sort of spread your risk, basically. So we do have an obligation and a role there to educate both and help both the investors, but also companies that raise through the platform. So it's not sort of a Wild West like, hey, we list like a Craigslist, list anything and see if it sticks and anybody can invest as much as they want. We are basically running a sort of a curated marketplace on both sides.
Sure. You gave a very diplomatic answer, Peter-Paul, but just to summarize, so you believe in democratization of investing into private companies, private placement as is known in the US, exempt market as is known in Canada, with a caveat, with a but, most lawyers answer that way, with a but that there should be some level of, regulatory framework where people can't come in and just, empty out their whole bank account. So there should be there's levels to it in basically what you're saying. Yeah. Now, continuing that conversation, currently, I was doing some research in the US. The Job Acts came out in 2012, which made the process of syndication, raising money for small companies, much easier. And in Canada, we had the abolishment of the Northwest exemption, which put a lot of flow into the offering memorandum exemption. Now, I understand that your intent is to make it easier for your retail investor to be able to invest in products. I understand your company's intent is the same as well. But if the regulatory framework in Canada makes the process so difficult, for example, an issuer like us has to draft an offering memorandum, which is a prospectus light, and has to do audited financials annually, which is very costly, especially when you have a very extensive org chart with companies all across Canada and the US, and sometimes is a gray area where all of those companies might have to do audited financials, which is in the thousands. It's a situation where the intent might be there, but then the regulatory framework makes it so difficult for issuers to be able to get involved and do deals. So my follow-up question to that is this: we have a potentially new administration coming into in Canada shortly here. In the US, we just had a new administration coming in, but we're going from liberals most probably to conservatives, depending on what happens in Canada. But if Pierre-Paul won and he brought you in as an advisor about the exempt market and securities, what would you do differently in Canada's framework tomorrow if you got that job?
Wow. So the first thing I would do, honestly, is I mentioned earlier that we have 13 securities regulators. This is not a new conversation here. This conversation has been going on in Canada for a while, that we have these 13 provincial securities regulators. I would harmonize that right away. I would do a US model where you have an SEC. You have a federal regulator. You still have provincial regulators. The U.S., as far as I know, also has state regulators. But you can basically have those provincial regulators execute and oversee, securities activities in their jurisdiction. And so I would have one regulator. I think Canada is also, too small from an economy and from a population. We've got over 40 million people in Canada. These provincial rules and frictions basically create barriers for companies that want to raise capital across Canada and are confronted with different rules, as well as for investors. Certain exemptions are available in Ontario, but not in BC, or the limits in BC are higher in Ontario, they're lower, or vice versa. And this is across the country. So that's the first thing I would do, is just harmonize it, remove those barriers, and therefore reducing unnecessarily cost of raising capital for private companies.
Amazing. Thank you for that.
Nice, Peter. All right, so changing the topic a little bit, Peter. How many investors are there on FrontFundr? And then I also was wondering, how much money have you guys raised since inception?
One by one we'll go.
Yeah, sure. So we build now a community of over 50,000 investors on FrontFundr. And we've done that through now over 180 successful capital raising campaigns through the platform. We raised over 200 million, so an aggregate 200 million that went through the platform. And again, whether you're an accredited investor or you're a smaller retail investor, everybody can basically invest through FrontFundr for as little as literally a few $100 or $100 to, well, 100,000 or $1 million plus. And so out of those 50,000, roughly about a quarter of that are accredited investors, and the other 75% is basically non-accredited investors. So we have a lot of retail investors on the platform.
Nice. And CPI's last deal, Atlas at Bay Point, was published on FrontFundr, and we raised, what is it, close to almost $10 million US on the platform. So excited about that.
Yeah.
All right. Let's talk a bit about we've been talking about this for a while, but the regulatory framework when it comes to securities compliance in Canada. You discussed how every province has their own securities commission, and if it was up to you, you would harmonize that and have one body like the US. But talk to us about some exemptions that exist and this concept of exemption. Just for me to quickly, for viewers and listeners who might not understand this idea of exemption, they keep hearing exemption. Exempt from what? Exempt from what? Yeah. The idea of exemption is you have a business idea, you want to raise some, and correct me here, Peter-Paul, if I'm off here, but you have a business idea, you have a venture that you need some money for, and you want to go raise money, but the regulators say, hey, slow down, you got to comply by our rules before you can raise money. Yeah. And if you need to raise money, you need to go through initial public offering, you need to draft a prospectus, and that's how you raise money. But you're like, hold on a second, I don't want to go through that. That's going to take a year. That's going to cost me $500,000. Yeah. By that, I just want to buy this apartment building. By that time, I have 60 days to close. I need to get this going. I don't have time for that. They're like, regulators are like, okay, fine. You can use these exemptions that exist that are the prospectus exemption. That means you're exempt from going through the prospectus route. That's how I describe it. I hope that's correct, Peter-Paul. And they list these exemptions that exist that you can go raise money. One of them being the offering memorandum exemption that we discussed. Talk to us about some of the top exemptions that are being used. And also, you talked a lot about crowdfunding, but crowdfunding is just a general lexicon word about getting groups of people to raise money. Syndication, crowdfunding, they're very similar. But part of these exemptions, there's also a crowdfunding exemption that's totally separate from this concept of crowdfunding. Talk to us about some of these top exemptions that exist in Canada to raise money.
Sure. Yeah. This is my favorite topic, right? All the regulatory and the rules and regs in Canada. And so you're right. So first off, with regards to exempt from what? And you're right, indeed, exempt from filing a prospectus, which is typically a costly, an onerous way to raise capital. And this is what typically public companies do. And so if you're a small company looking to raise $500,000, doing it through prospectus is obviously way too expensive. And so there is, as you also mentioned, the offering memorandum, which is kind of indeed a prospectus light, which enables you to raise from accredited and non-accredited investors. And but the only thing is, you do need indeed all those financial statements for the offering memorandum, and you need to put together the actual offering memorandum, the offering document itself. And so again, for a company that's raising $500,000, it's still very expensive to do all that. And also often these companies don't have all of those financial statements, which you need to do, then subsequently need to file every year. So the problem there is really that for private companies, traditionally they have been able to only raise through two other exemptions, prospectus exemptions. One is the family, friends, and business associates, the FFBA. So you can basically go to your friends, say, hey, I'm or a family member, I'm building this company, would you like to invest? And people are not aware that they're actually using a rule, but they are using the rule, the FFPA.
The moment that you incorporate a company, and if you have more than one shareholder, you're automatically under the umbrella of private issuer exemption, pretty much.
That's right. You're under the private issuer exemption is correct, which goes up to 49 investors, and then beyond that, you can't use the private issuer exemption. Most companies are not aware that actually they are a private issuer and using those rules. So the FFPA, but hey, you only have so many family members and also friends. Because the whole thing is, how do you define a friend? It's not like friends on Facebook. It's, that's, and the regulators, it's a bit of a gray area. So they're not too keen on the FFPA anyway, because you could say you can define everybody as friend. So that's the traditional exemption that's used. The other one is the accredited investor exemption. So you need to meet certain income and asset threshold to qualify as an accredited investor, which, for example, angels typically do, and other wealthier investors. So, but that's a really small group. Like what is that? A couple of percent in terms of people that actually, qualify for that under that exemption. So then the next one is indeed the offering memorandum, which we discussed. But again, for companies raising smaller sums of money is still a lot of work. So indeed, the regulators in Canada came up with a prospectus exemption for startup. They actually called it a startup crowdfunding exemption. The 45110, they give all these exemptions numbers, so 45110, which enables private companies to raise from anybody they want, and with they do need an offering document for that, but it's a fairly light document. There are no all the financial statements needed, so it's easier for these companies to use this exemption and raise capital. There are a couple of things that the investor can invest up to maximum $2,500, or if they go through a registered portal like FrontFundr is, and we deem it suitable, then it can be $5,000. So that's an exemption that, and initially the regulators can introduce different startup crowdfunding exemptions that were sort of fragmented. It's very difficult. Only since 2021, we have actually harmonized startup crowdfunding exemption in Canada, this 45110. So it's been harmonized across Canada. That's a positive thing. That certainly is progress. So companies can use this rule. Typically, if they raise from $500,000 to up to 1.5 million, that's actually the limit for this rule. But because FrontFundr operates as an exempt market dealer, we can combine these rules. So typically, if a company wants to raise $3 million, we use the FFBA, we use the accredited investor exemption, and we use this startup crowdfunding exemption, and we can stack them so we can maximize investor outreach for investors. So yeah, that's in a sort of in summary the exemptions, how they're used, and the key ones that are available in Canada.
Great. Yeah, and I'm just kind of, for our viewers, US-based viewers and listeners, I just want to kind of distinguish here the offering memorandum exemption that exists in Canada, where you're drafting this extensive document, which allows you to raise money from accredited and non-accredited investors, is very similar to the private placement memorandum, the PPM in the US. That exemption is a 506C exemption. You need to draft a private placement memorandum. But the difference is that when you draft a PPM in the US, you can only raise from accredited investors. But in Canada, when you draft the offering memorandum, you can raise from accredited and non-accredited, but you have to do audited financials annually. In the US, you don't have to do any audited financials. Another quick item that I want to touch on that you talked about, the accredited investor exemption and the private issuer exemption. Private issuer exemption, which limits you at 4950 investors. It's a non-reporting exemption. So you don't have to report anything to the issuers. Like we talked about, you open a company, you have a shareholder or a partner, you don't have to report anything to the regulatory bodies. But if you do an accredited investor exemption, you have to report. So, for example, CPI, in some of our deals, even though we were bringing on only accredited investors, we still decided to do the private issuer exemption because we didn't have to do any reporting.
Yeah.
So you have to be savvy with all these really. It's a maze. It's a maze. It's like Canada, where there's lots of ice. You're like walking on ice as you're trying to navigate.
That's right.
But let's keep going here.
Yeah, just changing the topic a little bit. Peter, how did you see the investor sentiment shifting in the market as there's been quite a bit of economic turbulence and interest rates going up over the past couple of years and faster than ever before, and GPs, finding themselves in some trouble. Did you see a change on your platform and how much capital was being injected into the issuer deals on your platform?
Yeah, for sure. We actually saw let's say two significant changes over the years. As I think it's fair to say here in Canada and globally, that the sort of the opening up, the democratization of the private markets is ongoing. It's unstoppable. It's going to get bigger, but it's still in process. We saw a significant jump around COVID. That was, of course, where there was no other way to raise capital than keeping distance. And then, raising online is obviously a great way to reach out to prospective investors. And investors, of course, also became more familiar, if they weren't already, with actually purchasing everything online, including investing. So we saw a huge spike in investment activity on our platform, around COVID. So the sort of I would say the breakthrough, and where investors went online and familiarized themselves with investing online, and we saw tremendous growth in those during COVID. And then, of course, the economic downturn for about 18 to 24 months ago went the other way, where we clearly, as you mentioned, increased interest rates, high inflation. People are becoming clearly much more careful and cautious with investing in general, and particularly in more risky investments in private markets. And so we saw a pretty sharp decline in investment activity on the platform around 2021, 22, and so we also had to adjust, because it was kind of two ways for us. Because for companies, you also made a comment about venture capital and GPs, and also having trouble to raise capital. They also hit the brakes. So the venture capital is literally drying up, and so companies were obviously looking for alternative channels to raise capital. So that was where we were interesting. Like, hey, maybe I should raise capital online and reach out to a much wider audience. So we had a lot of interest from companies looking to raise capital through this alternative route, if you like. But we also have an investor side, of our marketplace, and they became more cautious, more careful. So it definitely has been more challenging. We definitely saw average raises, capital raises by companies go down. And so you have to sort of adjust in terms of, what are feasible goals, and how can you sort of define the milestones and, let's say, the funding path with raising less capital. In the last, I would say, since the last quarter of 2024, we feel like the market has turned the corner. Obviously, interest rates have come down significantly, certainly in Canada. We have now 6 consecutive rate cuts by the Bank of Canada. Inflation obviously is now within the target range again, and so we've seen it sort of pick up activity, and we see that investors are coming back. Like, it's early signs, but yeah, it's moving in a positive way, a positive direction.
Nice. Yeah, we can feel that too. Now I want you to kind of take me back to 2013 when you first founded your company. And, this retail investors were learning more about private alternative investments. I know even just recently, some investors haven't learned about the space yet, and they're very excited. Hey, this is even an option. Have you seen a huge uphill climb since back then for investors getting excited to invest in private alternative investments?
That's a great question, because as I mentioned earlier, I saw what was happening in UK, where it started in 2010 with investment crowdfunding, and it made a lot of sense to me. And in fact, today about 40% plus of companies raised through FrontFundr-like platforms in the UK fully, or use it as an additional channel. So back in 2013, when I decided to fully jump into this, it was everybody was in the dark on how would this be possible? Should it even be allowed, including regulators? The reason I actually jumped into the opportunity was because of the offering memorandum, which existed in most provinces already for many years. It was originally used a lot also in the real estate, but also in the resources industry, the mining industry. And of course, OMs enable you to raise from non-accredited investors as well. And that's what I had my eyes on. Like, I'm not dependent on regulators. I can actually use that offering memorandum, but obviously run in a challenge that company that's only looking to raise perhaps $500,000 or $1 million or a few million, the OM may still be too onerous to really do that and to be too expensive. But at that time, as it was sort of a complete novelty, really, like, investing in a startup, but I'm not an angel and, investing for a few $100s. And for companies, like, can I raise truly from the public, no matter whether they're accredited or non-accredited? Yeah. So the whole journey then is not just about building FrontFundr and, promoting FrontFundr and putting all the pieces together, but it was also a huge, I would say, creating an awareness and educational side of it, and actually, explaining in the market how this works and that this is indeed possible. And so it's great to be sort of a first mover and innovate, but you also have to do all the heavy lifting in terms of, also building the market, if you like. So that was a tremendous job, and it still is. Like, I would argue that this investment crowdfunding or investing in the private markets in Canada and most other geographies, it's still early days. It's still in its infancy, I would say.
Right.
Got it. A quick question before going back to the couple more questions we have before we finish the show. Going back to you having the signing authority of any regulation that comes out, would you still segregate between accredited and non-accredited investors? You still want that idea to exist, that certain investors, because of their income and net worth, are accredited and the rest of them aren't? Or would you just abolish that as well?
The whole accredited investor exemption is actually an invention by the securities regulators, right? They came up with it. I know that in the US, they're reviewing it, whether the thresholds are actually still applicable and should be revised. And it was also based on the fact that, well, if you're an accredited investor and you have X amount of money, you can probably afford to lose a certain amount, right? But the fact that we have smaller investors that have, let's say, a total portfolio of a couple of tens of thousands of dollars, perhaps, that they're looking to invest in private markets, as long as they can make smaller investments, if they lose all their money, which are smaller investments, it's not going to break the bank, right? It's not going to get them into trouble because they're able to make smaller investments. So I think the accredited investor exemption should be overhauled, and I see a lot of accredited investors writing big checks without necessarily, perhaps, let's say, inform themselves as well as they should have done, but simply because they are able to invest large amounts of money. And I see smaller investors that invest perhaps few thousand and perform a very diligent, make an informed investment decision by reviewing all the materials we disclose on FrontFundr, etc. So I think it's ready for a review, and I think that the thresholds and income and was it income and asset test should be revised, and I think it's becoming less relevant. Yeah.
Got it. Great. Switching the conversation, last question before the next segment of the show. Let's talk about investor psychology. Going back to companies and products, a inferior product compared to a superior product will do more sales if it has better marketing. It all goes back to marketing. Mm-hmm. Talking about that idea when it comes to issuers or companies that have a product, for example, on your platform, what has been your experience on who can raise more money? Is marketing still a huge part of it? Or is it that investors just look at the investment, look at the returns that exist, and they just want to invest in the highest potential return, highest forecasted return product? Talk to us about what you've seen over the years, how important marketing is when it comes to companies trying to raise money.
So generally, raising on FrontFundr, often I say, look, we're basically providing a virtual stage for companies to go on this virtual stage and to broadcast their investment opportunity to our audience and also reach out to new audiences. Now, to do that effectively, you typically need marketing. You need marketing resources, and you need to actually undertake marketing activities. So that's definitely a factor. Companies that allocate resources, time, and money for that are typically more successful on the platform than those that have zero resources. That's also why we indicate it as a potential issue for successfully raising with FrontFundr. The other one, which is really important, because it is indeed psychology, you're right, with investors, is that the typical companies on FrontFundr are relatively newly founded companies addressing problems in the market with innovative solutions. And so there's often not a proven track record yet, even with those solutions itself. So it all comes down to storytelling. So storytelling on the platform is really important. Get people excited, explain as clear as possible on what you're trying to achieve, and how you want to do that, and why you're looking to raise money from investors. So the whole storytelling and the whole getting investors excited about the opportunity, and also excited about and the confidence that you and your team can execute. Those are really two really key components on FrontFundr. It's really about telling the story and getting people excited about from, hey, I want to be part of that. I can see these guys succeed and build a successful company.
Yeah, we have a lot more questions.
I agree with you more.
We have a lot more questions for you, but we're getting to the top of the hour. We know you're super busy, Peter-Paul. So let's get to the next segment of our show, 10 championship rounds to financial freedom.
So there's 10 questions, Peter-Paul, and whatever comes top of mind. Are you ready?
Yeah.
Okay, first question. Here we go. Who's been the most influential person in your life?
In business, Steve Jobs.
Right on.
Nice.
Awesome.
Okay, attention to detail. We know that Peter-Paul has most probably tremendous attention to detail.
Yeah,
so
absolutely. Okay, second question. What's the number one book you'd recommend?
Actually, a book that I recently read, No Rules, about a Netflix story. I think it's very interesting. Very all about innovation, how innovation builds great companies. Yeah.
Nice.
So I read it recently. So
what is it called again?
No Rules.
No rules. Okay.
Check that out.
Right on. Okay, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
I would once you get set your eyes on something and you're ready to jump, then jump with both feet. I worked initially in banking and finance, a very predictable, protected environment, and it took me some time to make up my mind, and I made that move. This was back in 2010. I also moved to Canada, but yeah, I would expedite that process.
Love it. Awesome. Okay, next question. What's the best investment you've ever made?
The best one I made was in a plant-based protein company. They raised on FrontFundr, and
nice. Okay.
and they raised on FrontFundr, and this is, I would say, an outlier, but they raised on FrontFundr about $700,000 through convertible note. They were basically identified. This was a whole plant-based hype by an investment banker in Canada. Took them public, and so I had a very handsome exit within 2 years.
Nice.
About 35 times my investment. So yeah.
Oh wow!
Wow.
Nice. Okay.
Well, yeah, CPI you might not 35 times, but we try to double your money in 5 years. That's what.
Well, that's also pretty handsome, right?
All right, next question, Peter-Paul. What's the worst investment you've ever made, and what lessons did you learn from it?
The worst investment I made is a company, and you see it happen certainly here in Canada with sort of the junior exchanges, is a company, big plans, going public. So this was also after the other story I told you. So I guess I smelled the coffee, but didn't do it in the right way. Is that companies that are, first thing they talk about is we're going public and we're going to do it in a year and you're going to get X return. I invest in a company where I sort of carried away a bit by that story. And there's a time and a place for companies to go public. This one clearly was way too early. So that was not a good investment.
Okay. All right. Next question is, how much would you need in the bank to retire today? What's your number?
To retire today, to do the things that I want to do in retirement, 3 million.
Okay.
Not bad. All right. Very achievable, I think.
Yeah, I'd like to think so.
All right. If you could have dinner with someone dead or alive, who would it be?
We're throwing hard ones at you, Peter-Paul.
Oh man, that's a dead or alive.
We'll give you two. We can do one alive, one dead.
One dead. I would say Ernest Hemingway. It's interesting. I came up with that one. I do like his books, and I would like to have a chat. And yeah, so that's the one.
Nice.
And alive, Obama.
Nice. All right. For $1 million, you can actually get him to come speak for you. You can have him.
That would take a third of my retirement.
All right.
Yeah, exactly. Okay. Nice. All right, Peter-Paul. Next question. If you weren't doing what you're doing today, what would you be doing now?
Cooking.
Oh, okay.
I love cooking. I love food, and if I would do something completely different than what I'm doing right now, yeah, it's cooking and running a place. It's something that. Yeah.
Sure. Where? So our viewers can have an idea of what the setting is like.
Southern Spain.
So I think I would have guessed Spain as well. They have great food there.
Amazing.
So go ahead.
Amazing. Okay, my favorite question, Peter Paul, book smarts or street smarts?
Street smart.
Okay, perfect.
Last question.
Last question. If you had $1 million in cash and you had to make one investment today, what would it be?
Yeah, it's SpaceX.
Wow.
Oh, very cool.
Okay.
I was about to say OpenAI, but then maybe I should say DeepSeek.
DeepSeek blew it out of the water. Does it way cheaper and faster.
Yeah, exactly.
Great, man. Thank you so much. We really appreciate all the wisdom and information you shared with us and was very candid and open.
Peter Paul, just quickly let the audience know the best way to reach you.
Yeah, best way. I'm obviously on LinkedIn, Peter-Paul Van Hoeken, and of course, FrontFundr, www.frontfundr.com. Those are the easiest way to reach me.
Wonderful.
The funder in FrontFundr doesn't have an E, so it's just a...
Yes, thanks for reminding. It's contemporary spelling, right? So it's FrontFundr with DR.
That's right. That's
awesome.
Right.
Thank you so much, my friend.
Thanks for being on the
Likewise.
show.
Thanks for having me. Enjoyed it.
Thank you. Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.